Welcome back. You're still tuned into Trading Hour. Well, let's talk about Puravankara. The realty firm has acquired redevelopment rights for Miami Apartments, a prestigious society located in Breach Candy, South Mumbai. The site spans over 2,000 square meters, marking Puravankaras' entry into the high-end South Mumbai real estate market. To discuss more on this, we are joined by Abhishek Kapoor, Group CEO at Puravankara. Abhishek, good morning. Thank you so much for joining in. But it's just not the Breach Candy project. There is a cluster development that you're looking at in Andheri as well. There's a land buy which is happening. There's a lot actually happening. The joint development agreement in Bengaluru, which you have reported to the exchanges. Just on the redevelopment bit, there have been a slew of announcements in the past couple of quarters as well. Has it already started contributing to your sales right now? If not, say 2 to 3 years down the line, what percentage of your overall sales would come from redevelopment?
Very good morning, and thank you for having me on the show. As you rightly pointed out, we have been very active in acquisition, both in Bangalore and in Mumbai on the redevelopment projects. Currently, we haven't launched the redevelopment projects, but we have about 5 ongoing projects in the western region between Mumbai and Pune. We intend to bring these redevelopment projects to market starting this financial year. And we are expecting that between this and next financial year, we should bring all of these projects to the market. Our estimate is that we will eventually in next 3 to 4 years time frame see on a much, of course, on a growing scale, see about 30 to 35% of our business coming from the western region. Of course, given also the fact that we'll continue to grow in Bangalore and the other markets that we are present in. So there'll be a lot to catch up for all the markets in terms of our team. And we're pretty excited with the redevelopment projects that, we are expecting to launch.
How much will redevelopment be as a part of the total sales value? In that 30 to 35%, how much would redevelopment contribute?
Look, I think we are expecting almost 15 to 20% of the overall business, which is, of course, as you would know, we are in 9 cities today across the country, and we're also entering NCR. We'll expect that on a larger scale, at least 20% of the business will come from the redevelopment. We also have outright, we just acquired a land of about 12 acres in Thane, which will also go to the market. So, given all the JDs and all the, outright transactions that we are doing, I would expect that about 20 to 25% of business still to come from redevelopment space.
And how will this change your margin profile? This focus on Western India, Mumbai, Pune, etc. And some of these projects, like say your South Bombay project, is going to come in at much higher average sales realization.
You're absolutely right. So, our entry into Mumbai will ensure that our average realization goes up significantly, and a project in South Bombay or the one that we have in Pali Hill or the one in Lokhandwala. But now, if you see the trend, we are kind of in all parts of Mumbai. And all of these will significantly contribute in terms of absolute numbers, both on the realization as well as on the margins on a per square foot basis. So we will see increasing contribution and an absolute number margins and both realization in the coming times on an overall basis. There'll be a very, very positive impact of this.
Okay. Abhishek, how much higher are margins in, say, a redevelopment project versus a project where you've just bought the land and you are constructing a building? And what is the lead time period difference, say, from you get approval for redeveloping a building to finally constructing it?
So 2 parts. One is as far as margins are concerned, you would see typically in an outright transaction where you own the land, the margins are typically higher. That's somewhere in the range of 28 to 35% EBITDA numbers. But if you look at redevelopment, it would be lower because though you're not paying upfront for the land, but there's significant cost of approvals that are required to be incurred. And of course, rent, corpus, all of those costs are there, which are upfront costs prior to launch. But you would see a typical EBITDA number of 22 to 24% as far as the redevelopment projects is concerned, though you will spread your expenses towards land, which is towards the construction of the members area, rent, corpus, and approval costs over a time. But even then, it comes out to be around 22 to 24%.
What is the call on pricing in Mumbai and Pune, where you are, focusing a lot?
Some say that perhaps prices have stagnated. So much of the redevelopment supply is going to come in the market in the next 1 or 2 years, including yours and for so many other builders. Half of Mumbai appears to be under redevelopment. So there is going to be a lot of supply. Do you think that puts a cap on prices, or perhaps prices come down?
See, Pune, I think, has headroom in terms of price appreciation, because I think there is significant traction in Pune. As far as Mumbai is concerned, so I would see, typical inflation-linked price appreciation in Pune. As far as Mumbai is concerned, I think Mumbai itself is like a country, and it's going through a serious urban rejuvenation in my mind, with all the infrastructure happening and all of the redevelopment happening. But there is very significant demand in the Mumbai market itself. I mean, really, it's like a world in its own. So in that sense, we see that continuing and the demand continuing. I think asset prices or project prices will go up from the launch to completion, like it goes in all real estate projects. So what may happen, that you may see that launch prices typically may continue to remain steady, or may just remain inflation linked. But appreciation within the project, from the launch to completion, you will continue to see the same cycle, because that's how the real estate cycle works, where you see from launch to completion about 50 to 70% appreciation. So that, I think, trend will definitely continue. Now, as far as supply is concerned, I think two aspects to it which we need to be mindful of. One is the fact that, which micro market are you participating in, and what kind of a project are you bringing in as a developer. So if you have a significant USP, which really, differentiates your product in the micro market you're present in, then I think it'll be a significant advantage for you. So for example, all our acquisitions, if you see Pali Hill, that's a very prime 2.5. There's nothing which is that size there. This particular project is again very significant. It's like right overlooking the sea and so on and so forth. So, and Thane, the one we acquired, is again a super prime. There isn't any plot available in that location. So, if your acquisition is right, I think everything else will fall in place.
I think, Abhishek, everything is prime in Mumbai. The way rates are going higher, and the way the pricing differential I've seen in the Andheri project versus the Breach Candy South Mumbai project, everything is sold as a prime project in Mumbai. But let's talk about your debt, because it has increased. I know you talk about how your debt per square foot has been going down, but even then you do have cash in your books. The absolute debt is going higher. Why is it that we're not able to reduce the debt overall in absolute number? Because with newer launches coming in, newer projects coming in, your cash flow should improve.
So cash flow, if you see, is continuously improving. I mean, our average run rate on cash flow is over 1,000 crores. And I think that will only improve with the new launches that we're adding. What happens is that, see, debt is, there are two parts to it. Now, while you have the cash, a lot of this cash is sitting in the projects where, RERA is there, and we have to keep the money in the account. Now, the only thing that we are trying to do is pay a little in advance and little early. But if you see on an overall basis, our breakout of the debt, or the breakup of the debt, you would see about 250 crores is sitting in commercial, which is asset creation. About 2,200 crores is self-repaying debt, which is, basically in the residential projects, which will naturally on its own account, in the manner that it has been agreed with the bankers or the financial institution, will go down in its natural course. So, there is a very insignificant, about 700 crores total compared to the overall, because net debt now is at about 2,200, and 2,100 is already getting repaid from residential, and about 250 is getting into commercial asset creation. It's a small amount to move into the residential category, and we don't intend to reduce the net debt number, because we want to grow faster and make this an insignificant conversation compared to the pre-sales and the business that we are doing. So if you see, for example, last year we did about 5,900 crores of pre-sales, and this year, in fact, we are planning to launch about 17 million square foot, of which about 12.7 is new launches, and about 4 million odd is opening new phases. So the business that we're looking at doing goes up significantly, and this starts to become really irrelevant in that sense of conversation.
Abhishek, quickly, we don't have much time. QIP plans, you had gotten the board approval. By when do we have a finality on that?
Look, as you rightly said, we have the board approval, we have the shareholders approval. I think we will come back to you as and when we have an update on this. But, from our options of raising capital, we have multiple options to continue to raise capital, and I think we'll pursue all of those opportunities and at an appropriate time, update you on this one.
Okay, all right, Abhishek, thank you so much for joining in today with all those details and a whole host of business updates as well. That's the word coming in from Puravankara. The stock higher in trade up around 5%. We'll slip into a short break. Up next, we'll put spotlight on IPOs and the IPO rush that's taken place so far this year. Stay tuned for that.